figure out from FMCG companies themselves as to what is it that they are doing to target to newer areas, to increase market share, and just generally, how will they combat the pressure on margins, if any? And to talk about all of that, we have Vivek Gambhir, MD of Godrej Consumer Products. There is just so much to speak to them. Remember, Adi Godrej, whenever he's joined us, has sounded extremely confident about how the next 12 months for GCPL could be like. Vivek, good morning. Thanks for joining in. We are almost at the end of Q2. Without getting into numbers, I know you would be in a silent period, but how has the quarter been? I mean, because you guys have constantly expressed confidence about how business has been for GCPL. Has the quarter been okay?
If we look at the last 6 months or so, we clearly began seeing a bit of a recovery starting in October of last year. And so far that recovery has been gradual. It has been uneven, but the good news is that it has been trending in the right direction. So in the first quarter of this year, we had almost a 13% volume growth. That was the best volume growth that we have seen in over 8 quarters. We are continuing to see a gradual pickup in urban. There are slight concerns as far as rural demand is concerned. But net, I think while there are some near-term pressures, we still remain optimistic that overall this year will be better than last year, and the second half of this year should be better than the first half.
Okay, that's good to hear. Vivek, hi, good morning. Tell us more about this project Leapfrog that you have, which keeps profitability ahead of sales growth, and more importantly, how did you derive at this Leapfrog analogy?
The idea of Leapfrog is to find ways to achieve quantum growth in performance. And so we had initially launched Leapfrog about 6 years ago, where we had laid out a 5-year roadmap for the business. And this roadmap was about figuring out what bets to take in India and what bets to take internationally. And if you see the last 5 years, our business has completely transformed. What used to be a largely India-only soap and hair color business now is far more diversified, with about half of our business coming from outside India. And our growth has more than doubled in both sales and bottom line over the last 5 years. We are now launching Leapfrog 2 to essentially lay out the roadmap for the next 5 years in terms of what bets we want to take as far as new categories and geographies are concerned. And if you look at our business even today, Africa and Indonesia are almost 40% of our business. We were non-existent there a few years ago. If you look at new categories, we were non-existent in air fresheners. That's 7% of our total business now. We did not have a business in hair extensions. That is 12% of our business now. Even in India, we've launched a couple of very exciting new brands. Bee Blunt is our premium hairstyling brand. We've launched Protect, our health and wellness brand. And the big, I think, news also has been innovation. So almost 40% of our growth is now being driven by world-class innovations that we're bringing to our consumers.
Very interesting. So, you of course have a strong distribution channel, and we understand you aim to strengthen it even further. Where is the scope for that? I mean, which are the areas do you see that this could take shape?
At an overall level in India, about 72% of our sales comes from urban, 28% comes from rural. So we've historically been a much more urban focused company. For the FMCG sector as a whole, almost 35 to 40% of sales come from rural. So in that sense, there is a huge amount of catch up that we need to do in rural, and we are targeting getting rural to almost 40% of our sales over the next 3 years. So there are lots of initiatives as far as rural is concerned. We are now covering about 60,000 villages. That number was about 15,000 villages about 3 years ago. We are investing a lot in rural marketing, in rural activation, and in rural infrastructure. At the same time, we see significant growth potential in urban. Particularly, I think over the next 6 months, you will see urban growth pick up. And so we have added about 30% more outlets over the last 2 years. We have added about 25% more feet on the street over the last 12 months. We have invested a lot in business intelligence in IT. We are creating specialist channels in cosmetics and in the beauty space and chemists. This whole program is what we call Project E-Cube. And so I think infrastructure improvement, distribution improvement, productivity improvements are a key part of our strategy. And I feel very confident that we are among the leading companies in this space as far as distribution strength is concerned.
But how is pricing power, I mean, a strength with you at all? Because, you know, we're seeing a slow growth scenario. We're seeing both urban as well as rural consumption trends dwindle right now. So how are you going about pricing right now?
In the near term, I think you're absolutely right. The bulk of the growth is going to be volume driven for a couple of reasons. One is input prices have come down quite a bit. And so we do want to pass on the benefits to our consumers. Second of all of us are looking to kickstart and really find ways to stimulate demand. So in this kind of a scenario, because all of us have a fair amount of cushion to deliver strong volume growth and kickstart demand, I think you will see relatively lesser price-led growth. A lot of the price-led growth will come from innovations, particularly in urban areas as you try and drive consumption. So we are looking at premium offerings, whether it's in hair care, hair styling, in hair colors, etc., to be able to get a little bit of price-led growth. But I think in this kind of a raw material pricing environment, over the next 1 or 2 years, I think the focus will be on volume-led growth, which I think is still fine, because fundamentally, you know, what is really important in our business is to continue to find ways to be able to increase volume share. I think there will be time to get price-led growth through innovations, but the story over the next 2 years will be much more of a volume-led growth story.
Would it be the same rationale? And I ask that because 45% of your sales are in India, while the remaining is in emerging markets like Indonesia and Africa, and they too are being severely hit by this, you know, slump or other global slump, so to speak. Their currencies as well are getting impacted. We're all in the same boat right now. So is that the strategy for these emerging markets as well, that volumes are going to pick up even if you don't have pricing pressure?
Yeah, clearly I think the focus across the portfolio will be more on volume-led growth. I think in India, because we participate in the soap portfolio, where palm oil prices are a huge determinant of our input costs, the impact is felt more in India. But clearly I think the strategy will be, let's continue driving volume growth, and through innovation and premiumization, let's try and find a way to actually extract a little bit more price-led growth, but the focus will be on extending and increasing volume share. And the strategy has played out for us, you know, across our portfolio. If I look at India again over the last couple of years, we've significantly outperformed the market in our categories. We are market leaders pretty much in every single category that we participate in, either number 1, number 2, or number 3. So the focus will remain on being able to extend market share, both through promotions and other kinds of reasons for consumers to buy our products, along with launching new innovations. And the great thing for us is that we are launching innovations both at the premium end, but also at the mass end as well.
Yep, and hopefully it should show as well very, very soon, though your numbers have been very impressive until now, Vivek. So good chatting with you today. Thanks for taking the time out. We look forward to chat with you, Vivek, post your quarterly numbers as well.
Wonderful. Thank you very much.
That's, of course, Godrej Consumers. And remember, it's been one steady mover in trade over the last few months. And the quarterly numbers have been fairly decent as well. By the way, the market's just showing a little bit of a recovery. Motherson Sumi is showing a little bit of a recovery as well. Bring up both of these. Look at the Nifty intraday chart or the Sensex intraday chart. Just about 100 points down now. Motherson Sumi about to break into the green. That's very, very interesting. So started off very low, up in the trade today at the highest point, and similarly for the markets as well. Look at the CNX mid cap index. That's just about 0.3% down. So that is actually doing rather well for itself. Just Dial has some gains, 987 up 2.5%. Strength in Dalmia Bharat, strength in Fortis Healthcare. So a bunch of stocks are active. as we speak. What I think we should do is, though, take a very quick break. We come back and probably talk more about some of these active movers in trade and try and get, of course, one more interesting management, which is the stock of which is in news as well.